Good morning to all traders and welcome to this Friday's Market Insights video provided to you by Orbex. Stavros here, Head of Investment Research at Orbex. When I talk about the FX majors today, Euro dollar, dollar Swiss franc and also Aussie dollar. We've seen what's going on in the markets. Volatility levels remain high, fear levels remain very high, elevated. And now this is of course the case because of the coronavirus, but mainly the market crash is owed to the inability of banks and governments to collectively respond. Only the BOE and the UK actually was the first one to do so. The ECB yesterday, the Eurozone failed to respond. Not only they didn't cut rates, but they didn't offer any liquidity. And in Italy, things are getting worse. Now, the question is, where are we going to see the euro dollar going? Okay, first, this is the one to explore. Now, euro dollar, if you recall last week, we talked about this potentially moving higher to complete the we've got an ABC here, right? We've had W, X, and Y over here. Okay, and then we're looking at this to become another 3 pattern to the downside, right? So we talked about this last week being an impulsive move to the upside to either take out X, or we also talked about the possibility of this becoming, being a W, X, and Y over here. And we talked about this potentially being wave 1, this wave 2, then 3, 4, and 5. But with the latest on the ECB, I think now we're going to head lower rather than higher, which means I am persisting on my initial projection that this is wave X and we're going to see prices moving lower. Now, how I see this moving, and this is because, of course, I see the last move to the downside as a 5-wave move. I believe we're going to see this is wave 4, and then we're going to see another move to the downside. This is going to complete wave 5. We're going to see an ABC correction, and then move again down with another ABC, with another impulsive move for wave C, right? I'm looking at the 61.8 extension of the first move to the downside, right? This is the 1066.80 or so, and at the same time, I want to draw a line over here on that level and see where we've got some confluence with that level, right? So this is one because we connect the bottom trend line over here with that price that we've just actually estimated. This is, if we look at this particular scenario, we're looking probably at the end of April to reach down to that level, okay? But the truth is that we could go lower. Now, since we've had this nice rejection up here on the 50 Fibonacci, this is from here to the top, right? The 50 Fibonacci, 114.50 or so, and very good psychological level as well. I think that we're going to head lower in an ABC manner, right? In case this fails, then what else I'm actually seeing, still bearish, I would be seeing this as an A, B, and C, right? So that would be wave A, then wave B over here, and then wave C over here, which means that wave X in this scenario would be up here, right? Actually, this might be a bit too long. I would look at this level actually, anywhere the 117, even potentially the 116 or so. And since we are here, we could do that. That would be the 31.2 Fibonacci at 117, right? So this is all for the euro dollar. Now, the next one to look at is the dollar Swiss franc, because that actually moved exactly as we expected. We were looking at this being 1, 2, then 3, 4, and 5, right? We've had a flat here, another flat over here, and then we had an extensive and expanded as well wave 5 over here for the intermediate wave. To me, this is wave 3 in the primary degree. So I'm expecting a wave 4 now, okay? And I don't see wave 4 actually going over the 0.96 200s. Once we get there, which means I'm seeing a little bit more upside to take out at least that level, then I'll be looking to go again further down to revisit this previous low, okay, for wave 5. Since this is a very strong zone, right, I will be looking to break this with wave 5 so that we can continue lower. Now, we've had the first attempt to break it. We failed, which means we're seeing a bounce now, and then we'll continue lower. If we're not going to see this being revisited, it means that we've had wave 5 ending here, and this is an impulsive move to the upside, which means we're going to break above the 96.20. But actually, I really think that we're going to get a move to the downside once we reach that level, right? Now, the Aussie dollar, we've paid attention to that for a while now, because we've been looking at this ending up here, and we're looking at the reversal. Actually, that was here, the first crash on Monday, I think it was. That created an opportunity to sell again, right? I really think, though, we've really reached a very good level for a reversal over here. It's the 62 cents as well, right? So I've been looking now for a reversal, to be honest, right? The question is, are we really going to get prices moving higher? Are we going to get a fresh low again? Well, if we go a little bit lower down on the 4-hour chart, let me just come a bit closer over here, right? What I want to look at, because this is, again, a 5-wave move to the downside. 1, 2, 3, is either 3, 4, and 5, and we start moving higher, or it's either 1, 2, 3, 4, and 5, and then we start moving higher. Although prices actually have gone down to near to the 62, they didn't really take it out. So for that reason, I think we might see another move to the downside, take out the 5th wave, and then start moving higher.